Let's look at doing Velocity Banking with this budget. They have a good monthly income at $11,411. Their monthly expenses total $9,627. This means they have $1,784 left over that they can use to pay down debt. Now also, if we look at their miscellaneous spending, that totals $3,182. So I think they can probably cut back some here. We're gonna go over that in just a little bit. In the planner, we've listed all of their cash expenses in red. These are anything that cannot be paid with a credit card. They have to come directly out of your bank account. This would be things like your mortgages, your car loans, personal loans, life insurance, anything that cannot be paid with a credit card. We have all of their credit cards and their minimum payments listed. And then we have all the other expenses that can go back onto the credit cards. Then we also went in and circled the statement dates for the credit cards and put little initials next to them. That way we know which card is closing on each day. Remember, you want to keep your credit card balances at their lowest on these statement dates. Now with the miscellaneous spending, remember we had the $3,182 here, but then we also had medical bills and co-pays of $100. So it's really $3,282, which is what we have here. When we look at this, $500 of that is a grocery budget. Now, if we're looking at this, we take the $3,282. I would try to cut $582 out of that miscellaneous spending. So let's subtract that. This leaves $2,700. $500 of that is going to be groceries. If we subtract the $500, that's $2,200. This is for two people. What I would do is set a daily spending limit. So we would take this number, divide it by, let's say there's 30 days in the month. This is $73 per day. Divide it by 2 for the two people. They can each spend $37 per day. Remember, we took out the $500 for groceries, so that's separate. So if you're someone who spends daily, setting a daily spending limit for yourself might be really helpful. They do have a lot of income coming in on multiple days out of the month. It's important to budget monthly, but also every time you get paid, which is what we're going to be going over. So we're looking at April, but on March 30th, they get $2,101. On the 1st, their mortgage, their second mortgage, and their Firestone credit card are due. The income that they get on the 30th should cover most of that. Hopefully, they have a couple $100 left over from the previous week that they can use to pay the remaining mortgages and the Firestone card. So we're gonna start with the paycheck on April 4th. They get $2,500. So we get $2,500 on the 4th. We're gonna go through and look and see what cash expenses we have due. This education, the proceed, and the life insurance. So those are all going to be paid with that paycheck. Those total $975, which leaves $1,525 that we can use to pay the credit cards. These are the two credit cards that are due during this paycheck. Another thing we have to do is plan which bills are going to go back on each of the credit cards. This car insurance will probably be paid with the Discover card because that statement closes on the 3rd, even though the Discover card is due at the end of the month. The statement is probably towards the beginning of the month. This internet bill could go on the Wyndham or the Citi card. The Wyndham dues could go on the Wyndham or the Citi card. These three bills here would probably go on the second Citi card. Then we have the miscellaneous spending. So this is what this would look like in a list form. We have nothing going back on the Firestone card. We're going to split up the miscellaneous spending and put it on all 4 cards. Then this was the other bills that we planned to put on each of the cards. With the miscellaneous spending, remember I said I would cut $582 out of it. That would leave $2,700. If we take the $2,700 and divide it by 4, that's $675 going back on each card. You can do that as a daily spending limit or you can do it weekly. But as far as the cards go, it would be $675 for the $2,700 in miscellaneous spending. This balance will temporarily go up on the Discover card because we're using it at the beginning of the month. We haven't had a chance to pay it yet. But at the end of the month, this will all make sense. Okay, so April 4th, we have $2,500 in income. We pay cash expenses of $975. We have $1,525 to pay to the Wyndham card and the Citi card. The Wyndham card, we know the internet, the Wyndham dues, and the miscellaneous spending will go back on it, so we calculate those. So we said the miscellaneous spending was gonna be $675. The internet is $80, and the Wyndham dues are $97. So we at least need to pay $852 plus interest to that card in order to be able to put those bills back on it. We pay extra if we want the balance to go down. The interest on that card is probably around $64. So let's say we round up to $1,000 and pay that to the Wyndham card. So we pay $1,000 to the Wyndham card, which would mean we would pay $525 to the Citi card. Remember, we're going to put the miscellaneous spending also on that Citi card. So we haven't quite paid enough to be able to do that. but we get another paycheck on the 11th before the city card statement closes that we can go in and pay more. So on the 11th, we get $1,700. We look at the cash expenses. We have the Wyndham and part of the Tahoe payment that have to come out on the paycheck that they get on the 11th, which was $1,700. Now I did have to fix these numbers. Sometimes that happens when you're doing a lot of numbers. You mess up. Anyway, just double check. So we have $642 coming out for those two cash expenses, which leaves $1,058. Now remember, we paid these two cards with the paycheck on the 4th. But those statements on those cards probably don't close until somewhere around the 13th. So when we get paid on the 11th, we can still go in and pay more to those cards to have the balances report lower. So for the paycheck of the 11th, we could pay the Wyndham, the City, or the other City card that is due during that pay period. Then we go back and see what we were going to put on these cards. Remember, we had paid enough to put all of this spending back onto that card already. This was close. We paid $525. We need to pay a little bit more to this City card, and then we have to make sure that we account for these expenses on the second City card. This City card here, we had these three bills plus the miscellaneous spending going back on it. So that's $272 plus $281 plus $104 plus $675 for the miscellaneous spending. So $1,332. Now during this paycheck, we don't have enough to do that. So let's not pay any more to the Wyndham card right now. We already paid $525 to this City card, but remember we have to put $675 back onto it for the miscellaneous spending, but we also have to account for interest. So we need to pay $675 plus the interest is probably $157. So we need to pay $830. I would round up and pay $900. So we already paid $525. So I would pay $375 here and then pay the remaining to City card number 2, which would be $683. Now when we get paid again on the 15th, we can still go in and pay more to that second City card. So we get paid on the 15th here. The statement doesn't close until the 20th. The 15th is actually the due date, so we can add more of a payment on the 15th. We have no cash expenses coming out between the 15th and the 18th because we already paid these two cash expenses here. We could pay this full $901 to the City card. Remember I said we needed to pay $1,332 to this card to be able to use it for those bills that we had planned. So we paid $901 plus $683 to that card, minus $1,332. We paid an extra $252 to that card. Now again, on April 18th, we get another $2,500. We look at the cash expenses, which is just one, which is this right here for $100. So we have $2,400 that we could go in. We could pay the City card again because the statement still hasn't closed. Remember, it's the 18th. The City card statement probably doesn't close until the 20th. And then we have to pay the Sam's Club during that paycheck. The Sam's, we had nothing going back on it unless this is where you buy some of your groceries. I don't want this to be too confusing, so we're just gonna say we're not using the Sam's Club card, but we're also not using the Firestone card. So anything we pay to those, the balances will go down. They're not going back up. The balance on the Sam's Club card is $1,156. So let's say we use $500 of this to pay that card down. They might take $25 to $30 for interest, but still that balance would have gone down $470. Remember with the City card here, we've already paid enough to cover those bills that we were going to put back on it, plus some extra. What I would probably do is I would pay some to the City card, but I would also start paying some extra to the Discover card. So we had $1,900. Let's say we pay $900 to the City card, and then we pay the other $1,000 to the Discover card. Now we're ahead on this card too. When we get paid on the 25th, it's $1,700. We find the cash expenses, which are the Affirm and the other Tahoe payment. We have $1,204 left over, but we also have to look forward at the money coming in on the 30th, plus the mortgages that are due on the 1st. So the money coming in on the 30th pays the majority of the mortgages, but we need $219 more to add to that. So we're going to take that out of the paycheck on the 25th. This leaves $985 that we can pay to the Discover and to the Firestone. The Firestone was a card that we weren't using. Its minimum payment is $60 and the balance is $1,335. So let's say we pay $300 to that card. Again, they're probably going to take out around $30 for interest, so the balance would have gone down $270. We're not using that card. Then we would have $685 that we can pay to the Discover card. Remember, we already paid $1,000. Now we're paying another $685. The Discover card has to pay for the car insurance and $675 for the miscellaneous spending. So we paid $1,000 plus $685 to the Discover card. We're paying for the miscellaneous spending with that card, and we're also paying for the car insurance. So we've paid an extra $743 to that card. The interest on it is probably $132. We've still paid the balance down $611. So this balance went down $600. This balance here probably went down $270. The Citi card balance probably went down $1,100. This other Citi card probably went down $70. And the Wyndham card maybe went down $90. Okay, I lied. The Sam's Club did not go down $270. The Firestone went down $270. And the Sam's Club probably went down $470. So in total, these balances would have gone down $2,600 in just 1 month. It may seem like you're not making a whole lot of progress on some of your cards. That's just the way your bills are gonna fall for now. But paying $500 to the Sam's card a couple months in a row, that will have it paid off. Then we can move that $500 to one of these two cards and pay those early. So instead of paying $500 here, maybe you would start paying $500 to the Firestone or $500 to the Wyndham or the Citi card. The hardest part about doing this is the miscellaneous spending and planning exactly what is going to go back on each card. That is super, super, super important. So make sure once you go in and do the miscellaneous spending of $675 on each card, you do not spend anything more than that. But their credit card balances should be going down very, very fast, especially if they're able to cut out the $582 here, which I totally think is doable for them. So again, we write out everything on the planner. You can also write it down on paper. That way you make sure you're following your plan. And then we have to plan every paycheck. We take the paycheck, we pay the cash expenses, and then figure out what we need to pay to each of the cards in order to pay those bills that we had planned to put back on them. There are a couple reasons why I like using this method. Number one, it teaches us to use credit responsibly with our miscellaneous spending. We have to plan what we're going to spend on the cards. Also remember, if you're having trouble with your miscellaneous spending, setting that daily spending limit can help if you're someone who's constantly buying things day to day. Number two, it helps us save money and interest, and we earn rewards on the credit cards when we use them. When you're paying off debt, you can turn those rewards into cash back to pay the balances down even faster. And number three, it helps our credit score. By using this method, our credit score increases much, much, much faster because we're paying the majority of our income to our credit card balances, waiting for those statements to close. Those balances report at a low amount, which is what helps our credit score. Our utilization on our credit cards go down and our credit score goes up. And in this case, they're paying those balances down a lot, so their credit score should start going up very fast. But anyway, this is how I set it up. If these are helpful, please like and subscribe, and let me know if you have any other questions about velocity banking, credit cards, credit scores, or anything else.